Um, Good afternoon, ladies and gentlemen, and welcome to this week's trade review and live trading session. I have CNBC on in the background just for the jobs number that is due out shortly. As always, if you have questions or if you have something in relation to one of the trades that was done this week, or just trading in general, a question that you would like to ask, then please ask away on your screens, and I'll endeavour to get back to you no later than the end of today, and ideally through this or during this particular session. Just in the last couple of minutes, the markets have traded off towards their lows of the day. Certainly the indices, gold is trading in a reasonably narrow range today. We saw 1840 very early this morning, and we've probably been down to about 1834 and a half, but the majority of the day has traded between about 1835 and 1837 and change. Before the numbers come out, and the number will be out in just under 8 minutes now, just wanted to have a little bit of look at the Dow. So I'm starting here with a 30-minute chart, and these will be levels that will be familiar with you from yesterday as well. Yesterday was a particularly good day from a trading perspective. The first 2 days of the week, Tuesday and Wednesday, were quite poor. So I'm still in a bit of a recovery mode from then. But the key area this week has been this 32,830, 32,850 area. You can see where we've bounced here, again here, again here. And whilst, so this was yesterday, we did a lot of buying around these areas, sometimes a little bit higher, and the market fluctuated quite actively between that 850 level all the way up to about 33,100. So as I'm talking, we're seeing a bit of a bid coming into the market, nothing too excessive. We're obviously waiting for these numbers, and there's a bit of to and fro in, a bit of spoofing from certain participants within the market. So we've been down to about 910, back up to about 943. But what I'll be looking for this afternoon is whether or not this key area that we've tested significantly 3 times over the last period, whether that level is going to continue to hold, whether we will see buyers materialise, come back into the market, and whether we can see a push higher. A lot of it will be on the back of the NFP data that is shortly going to be released. The environment is still very much the same as it was before Christmas. An environment where rates are increasing, and that is designed to enforce a slowdown in inflation, but at the same time it will slow down everything. So it will slow down the economy to a certain degree. It will slow down the creation of jobs, ideally, and lessen some of the spending power that's coming through to push inflation higher at the moment. With the jobs data that we've had this week, that clearly isn't happening quite yet in that particular aspect of things. The jobs data has been very robust, even strong, and so today's report carries a lot of weight. I think market estimates are somewhere around the 200,000 level in terms of jobs that were added in December, which will reflect a bit of a slowdown from November, which will be a positive sign. But if we follow on from the ADP and the JOLTS numbers that we've seen this week and get a particularly strong number, then the markets could trade off quite aggressively as well, and that 32,830, 850 level that I've already mentioned could be severely tested. So we're just under, probably 4.5 minutes away from the number at this stage. So had a quick look at the Dow there. I'm just going to change this out to a daily chart just so that we can see, and again you can see those areas of support. Probably got a support line coming in a little bit lower down around the 32,550 area, maybe slightly above that. But on the daily charts, we can see that we've, on some of the details that here, we have an RSI data, nothing really oversold or overbought, probably more selling pressure, as you would imagine, that we've seen over the last number of weeks with the market coming off fairly significantly. And you know, we're continuing to see, after that move down to 910, and obviously I've accepted this week that I've needed to keep my positions very, very tight, and I'm only trading 2 positions at the moment, and trying to adhere to that. It's very difficult from time to time, but on that move down to 910, you know, may have been interested certainly to buy around those levels, and we're probably 50 pips or so higher at the moment, although it's going to be volatile around this particular number, and has been volatile all week. We've seen very choppy trading. With gold, just a quick look at gold before these numbers come through as well, and then we'll look at the trades after the opening bell. I do have 2 very wide orders into the Dow at the moment. I do certainly have a slight preference to be long the market. I think the number could surprise and hopefully provide a positive response. Dow futures are very, very slightly higher. The Nasdaq is showing another loss at this stage, as is the S&P 500. So just on the subject of gold, you can see here the move towards 1850 that I spoke about this morning. I did carry an overnight position, closed out around these levels. Did try to get short again around 1840 or just above 1840 early this morning, but we never quite got there, and probably had a high trade short of 1838. And as I said, it's been quite a tidy range throughout the trading day, but I would expect us to see a fairly significant movement in one direction or the other on the back of this number, and what that potentially does to any rate decisions going forward. So we're just under 2 minutes now, towards before the opening bell. Dow still holding on around that 32,950 level. I will bring the Dow chart back up so that we can see the immediate action that happens after the announcement. So we're just push this back to a 1 minute chart. So the moves are going to look a little bit more dramatic. Again, a bit of a sell-off. It's too early for the number. We are getting close to that number, but you're going to see a bit of spoofing around this particular time. You may see prices disappear on your screen for a fraction of that as well. But to all sense and purposes, holding around that 32,940 level. So, and just less than a minute away now from those numbers. And futures have turned negative on the Dow. But as I've mentioned already, there will be a little bit of spoofing ahead of the announcement. So we're down there to 920, back very quickly to 930. And you can see the movements are so jumped right up there to 33,154, according to huge move to the upside there. So very nice profit taken on the trade that I had on from earlier. I'm just going to see how the other markets are moving. I seem to have lost my connection at the moment, so I'm seeing Dow futures off of the screens trading up as high as 33,300. Huge move to the upside. Unfortunately, my limit was taken out, I believe, and there could have been significantly more in that. The DAX trade has also moved into profit, but unfortunately I do not seem to have live updates at the moment. Thankfully they're coming back now. So Dow's traded off a little bit. I think I'm just going to close my my DAX trade whilst I have you here and have a think about this going forward from here, or maybe put a you'll see there I've just closed the DAX trade as well, but you know, really dramatic movements here. Unemployment rate 3.5%. You see that huge movement there. Sorry, this is gold. Let me bring the Dow back, which is going to show even more dramatic movements. So movement up there, way towards 33,200. I think it actually went higher when I was looking at the prices coming through, and we're seeing a bit of a settling down now. Now, what we've seen over the last few weeks, even months, is that there tends to be a couple of movements here around the non-farm payroll. One, immediately the numbers come out, and then one significantly later around the opening bell. So as it stands at the moment, my position is completely flat. I do have that limit order still in the market. I'm just going to delete that now while I'm talking to you, but a decent response there from those trades. I thought that the limit, the take profit limit that I put in the Dow was going to be too wide. Unfortunately, it wasn't wide enough, and there could have been another 150 or so pips on that particular trade. But both of the long positions have worked out well, and have probably returned me fairly close to break even for the week, correcting many of the problems that I encountered earlier in the week. So a decent return there. What I'm going to do now is I just bring up the trades for this week. So we're showing 170 pip, 2 pip loss or so far for the week. So I think the profit on the Dow trade will come in at about, let me just double check now whilst I'm talking to you. So we shot through my limit. So the Dow trade closed up 178 pips. So it's going to turn us profitable for the week, plus 20 pips or so on the DAX trade. So there will be a positive tinge, at least for now, and we'll await the opening bell and see how things go from there. So stocks this week were exceptionally tight, especially Tuesday and Wednesday. You can see stopped out on both of those days. Yesterday, no losing trades. Again, today there have only been 3 trades, but there have been no losing trades, and a slight positive tinge now to the trading for the week. So as I've said already, the limit worked. Unfortunately, it could have been better. I think one of the things, and you know, a few of the questions that I've been asked during the course of this week, just in relation to maintaining the 2 positions and the smaller position, I think far too often over the course of the end of the year, I amassed a position maybe of 5 or 6 open positions, and that's triggered far too many stops over or towards the end of the year. And unfortunately, with a tight stop, you really do need to adjust the amount of positions that you hold open, and that's hopefully what you've seen from my trading this week. It is difficult, means that you sit on your hands for a lot of the day, but it has at least been beneficial to this point. Gold has rallied up to that 1840 level, not really shot through from there. And when you look at the currencies, they've seen a bit of a recovery after the non-farm payroll announcement. The euro's back above 105. The sterling is moving higher in that 118.80 range. And the other markets have now settled down after that huge movement we saw after the numbers come through. Dow Jones futures, which trades significantly above the cash market, are trading at 33,217. So I think the high of the Dow move after non-farm payroll, I probably was only 20 pips or so off of that by the time that the order got filled. So all in all, I can't be disappointed with that particular return. There are no questions coming through at this stage, so hopefully you're all happy with the return over the last couple of days. If you do have questions, please email myself or Sam, so sam@bullandbearcap.com or nick@bullandbearcap.com, and we will do utmost to respond to you as quickly as possible. Right now, there is no further data that's going to impact on this market, so it is going to be an assessment by all of the big firms as to what they read into the non-farm payroll number, what that's going to do to the Fed's rate decisions from here. I'm a firm believer that the Fed cannot change path, has to continue raising rates until everything is firmly under control. Principle amongst those is, of course, inflation, and a stop-start policy, which I've seen some people mention over the last couple of days, and maybe a slowdown or a pause in the rate increases. It's been proven in the past not to work. I have no doubt it wouldn't work this time, and so I expect the Fed to continue as directed or as pointed out based on their dots and their forecast going forward. The terminal rate will probably be higher than the 5% that many people have been expecting, but I don't expect the Fed to waver in their dogged attempt to tame inflation. So we're getting close to the end of this particular session. There will be a couple of more trades this afternoon. I don't think there will be anything too aggressive. I do think there is a bit of upside still in this market. Preference would be to buy on the dip from these levels, ideally back towards 33,000, but I'll update you on those trades as we go through this afternoon. Thank you very much